Ladies and gentlemen, the time of easy money is over, and there's going to be huge trouble ahead coming for credit card holders and also zombie corporations. Because over the past 3 decades, the world has been on a debt binge. Interest rates have only fallen from their recent highs of 18%. Every single financial crisis, they were able to drop interest rates lower and lower and lower because they said there was no high official inflation of the CPI numbers. But now times have changed. They can no longer print money again. They can no longer lower interest rates to boost the economy because we have a big inflation problem. And everyone, we just got some new massive reports what's about to happen for this refinance cliff for a lot of zombie corporations. We also have now what we call zombie consumers, which are in big trouble, and also more information the economy is deteriorating. So everyone, you need to wake up and pay attention right now because there's a lot of irrational exuberance in the financial markets, especially with the AI frenzy. But like all new revolutionary technologies, it always creates hype and bubbles. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. So look at this, everybody. It's the end of easy money. Bankruptcies are piling up at the fastest rate since 2010. Because unlike some people may not realize, bankruptcies didn't hit their highs in 2008. A lot of people, they tried to save, they tried to use credit cards to get by month to month, and bankruptcies really didn't hit their peak until 2010 or 2011. Now, just very quickly before we get into this very important report, I just want to thank everybody that signed up for the pre-launch for my course, The Golden Path to Wealth, on how to build wealth and mastering the Trinity portfolio, mastering the cycles of gold, silver, and Bitcoin. And there's only 24 hours left for the pre-sale price of just $149. After the course is finished, the price will be doubling. It's very affordable. I see most YouTubers charging $400, $500, even $1,000 for their courses. I wanted to make this very affordable for my loyal viewers and subscribers so you can really learn how to build wealth and master the cycles of gold, silver, and Bitcoin. It's going to be very turbulent times coming ahead, and you're going to need to know how to repair. And I've put in all my 10 years of research into this course. So again, click that link in the description because once the course is finished, the price will be doubling. But okay, everyone, let's get into this report. It's turning into a banner year for corporate bankruptcy filings after years of easy money that caused all kinds of excess, fueled by yield-chasing investors, an environment where the Fed has repossessed yields with all its might. Those yield-chasing investors kept even the most over-indebted zombie corporations are supplied with ever more fresh money, but that era has ended. Interest rates are much higher and investors are getting a little more prudent and easy money is gone. So everyone, this is absolutely massive. Bankruptcies are piling up, and all these zombie corporations that maybe could have survived when interest rates were 3, 4, maybe even 5%, well, guess what? They're now about to pay 7% and they're not going to make it through. So lots of over-indebted junk-rated companies will restructure their debts in bankruptcy court at the expense of stockholders and bondholders and holders of their leveraged loans. That's how it's supposed to work. That's how corporate debt burden gets lifted off the economy, and it's starting to work that way. That's exactly right, everyone. This needs to happen because a lot of people, they blame capitalism on why there's so much inequality. No, the real reason why there's so much inequality is because these huge, large corporations, it's an uneven playing field. They can get cheap debt, raise debt very cheaply that small businesses can't compete with. They can buy in bulk that small businesses can't compete with, and they've been getting bailed out with this cheap debt when normally, in normal times, they would go out of business, and this creates opportunities for other individuals, maybe yourself, to go ahead and come and create a new business and take on less risk. So listen to this. The filings brought the 5 months total to 286 bankruptcy filings, the most since 2010, more than double the filings for the same period in 2022. And it even outran the 226 filings in the same period in 2020 when some companies face enormous stress. So we can see with this chart here, everybody, the trend is accelerating. But what is the real problem now? The problem now is that debt has got a lot more expensive and investors are thinking of buying this debt have gotten a little more prudent. The problem is the end of easy money. Once companies get hooked on easy money by having piles of debt, it's tough to get out without easy money. And I'm going to get into a moment how many American consumers are facing the same issue. In a way, the economy is normalizing with rates that were fairly typical before the era of QE. That's exactly right, everyone. We're not going to crazy high interest rates. We're just going to historic average. But the reason why this is so painful is because debt is 4 times higher than it was when interest rates were very high in the 70s and 80s. But companies that only made it this far thanks to easy money are now getting hanged out to dry. Bank filings will whittle down the corporate debt overhang, and many companies will emerge from from bankruptcy with less debt. They'll be nimbler and more able to thrive, and offers will be sold off in bits and pieces, making room for appropriately managed companies not encumbered by these issues. Exactly right, everyone. We can't have these corporations taking on these crazy risks and then go cry to the taxpayer and the central banks for a bailout, because again, this is making it unfair. Small businesses can't compete with this, and this needs to come to an end right now. There is a cleansing aspect to this part of the credit cycle that needs to be allowed to do its job to get rid of excess and deadwood at the expense of investors. This cleansing process that has now started is long overdue. So that's exactly right, everyone. During 2020, a lot of these companies got a free pass. Even if they were facing bankruptcies, a lot of the banks didn't go ahead and charge them with bankruptcies because they were so worried about the economy. But now things are getting normal, the banks are coming knocking and they want their money. But that's just the beginning, everyone. Look what's happening to consumer debt and credit card holders. So consumer credit surges to new record high led by credit card debt. So we can see with this chart here, everyone, the blue line is total credit, the red line is revolving, the light blue line is non-revolving, and the green line is non-revolving government NSA. So we can see here total consumer debt is approaching $5 trillion. And once it passed $5 trillion, all bets are off. So look at this. In nominal terms, revolving credit surged to $1.24 trillion. In real terms, inflation adjustment terms, credit card debt is at $980 billion. So approaching the $1 trillion mark of a credit card debt of 2008. And I think we're going to exceed that very, very soon. And remember, it's real spending that drives GDP, not just the prices going up, but what consumers are spending and who are facing the biggest issues. So anybody with an existing mortgage prior to 2022 was able to refinance at or below 3%, and they have extra hundreds of dollars to spend every single month. Even if they overpaid for the house, inflation has eaten up some of that refinance dividend, but has certainly cushioned the blow. But unfortunately, many people aren't in this situation, and it's getting very, very tough for them. Renters and those who more recently took out a mortgage are hit by higher mortgages or rent prices, in addition to rising food prices, insurance costs, and many others. For those whose wages have not kept up with the price of rent and food, nearly everybody, credit cards or tapping savings is the only way to maintain their lifestyle. So a very alarming new trend that's happening right now, everyone, it's not just people getting into credit card debt to keep up with the Joneses. They're unfortunately having to get in credit card debt just to pay rent, just to pay the groceries, and just to pay the bills. And unfortunately, once you start to go down that rabbit hole with these new interest rates of 20 all the way up to 30% in some cases, it's very hard to get out of. And now there's actually three classes of zombies, everybody. Corporate zombies are firms that are unable to generate enough profits to cover debt servicing costs and that need to borrow to stay alive. But now with high interest rates, they're not even able to do that. But there's consumer zombies as well. Consumer zombies are those who want to move but cannot because they do not want or cannot afford to trade their 3% mortgage for a 7% mortgage. And consumer zombies also include those who are trapped in rental units with no hope of escape. And this is all because of the Federal Reserve. They've created some big winners and they've also created some big losers. The Fed created this set of winners and losers, and it did so on purpose to increase inflation. Now the Fed does not know what to do with the inflation mess it created. This is why we cannot allow central planning and central banks, everybody. They were not created for the American people. They were created to benefit the banks. And they will continue to do these boom-bust cycles until they squeeze every last dollar out of the middle class. It's quite funny when you think about it. They lower interest rates to stimulate the economy, to create jobs, but then they go, what? The peasants, they're starting to get jobs, they're starting to earn more money. That's it, we need to crush this economy. And then what they do, they tell their bankers' friends, they tell the people in Congress, they tell all the people at the Federal Reserve that work at these banks, they've all been caught doing this, doing insider trading. They sell the assets at the top, they crash the markets, they crash the economy, and come and steal everybody's assets for pennies on the dollar. But once you learn the cycles, everybody, once you learn the financial system that is just one big game, instead of being played, you can play it yourself. They warn housing generally leads the economy into or out of recession. Think of all the appliances, carpet, cabinets, and landscapings that happen when people buy homes. Also think of household formation and plunging birth rates. The Fed cannot afford to stimulate housing out of fear of stroking more inflation and has stranded these three classes of zombies in the way. So don't expect much more than weaker near recession GDP. If that, I think we're in a recession right now. It's payback for 3 rounds of mostly unwarranted fiscal stimulus on top of serial bubble blowing Fed policy. So everyone, we're going to have a big debt cliff coming, and a lot of banks are already starting to close their books. And even the famed investor and the man himself, Ray Dalio, is warning warning that we're in the late cycle. Look at this, everyone. Ray Dalio says the US is at the beginning of a late big cycle debt crisis. Ray Dalio said we're at the beginning of a late big debt crisis when you are producing too much debt and have a shortage of buyers. He said while interest rates won't go much higher, the economy will get worse, and that could cause more internal strife if the US continues to have political fragmentation. So that's exactly right, Ron. The Federal Reserve's due to do at least one more rate hike, and even if they stop lifting interest rates, even if they just keep interest rates where they are, it's still going to have a damning effect on the economy because we normally see a lag of about 6 months, so we haven't felt major pain. But we are starting to see the early signs. Look at this, everyone. So US jobless claims surged to 261,000, and this is the highest since October 2021. So we are starting to see the reversal in the jobs market from all these rate hikes by central banks. And we can see the reversal in this chart here, everyone. The report highlights the labor market that, while largely resilient, may be starting to show signs of cooling. US companies announced more layoffs in the first 5 months of 2023 than all of last year. While job cuts have mostly been contained to white-collar sectors, including technology and banking, economists expect these plans to soon materialize into more dismissals. So this is called the flow-on effect. Once these high-paid white-collar people and these people in these banking positions lose their jobs, they're going to spend less on services like retail and hospitality, and then that starts to affect their income and their jobs as well. So everyone, I know we're thinking, well, okay, what does all this economic jargon mean for you in simple terms? What this simply means is a lot of these zombie corporations, they're about to go out of business, but this will create huge opportunities for those wanting to start their own. But unfortunately, a lot of the US consumers, they're in big trouble with this massive credit card debt. This is going to weigh on economic growth and a lot of companies' earnings, that is going to affect this stock market rally we've been having. Because like Ray Dalio warned, we're at the end of the bigger cycle. This debt binge we've been on for the past 40 years, it is going to come to an end now that we've reversed the trend and we're into a rate hike cycle. So everyone, what I think, we're going to head to a period of stagflation, of higher unemployment and higher inflation. Now, what normally outperforms during these periods once it actually happens, because again, we do have a lagged effect from the Fed policy of about 6 months, is people run to flights of safety of gold and silver. But in case the Federal Reserve does the unthinkable and starts lowering interest rates and printing money again to bail out the big banks and corporations, we have a market melt-up. Also, Bitcoin has been proven to be a hedge against currency debasement and inflation as well. So again, everybody, if you're wanting to learn how to build wealth and master these cycles, you can click the link in the description below. This is your last 24 hours to get it at this price. But everyone, what do you think about all this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.